combined expenses account. What does that mean? Means that sometimes they don't want to prepare 2T account. So therefore they make it two expenses. Cannot be one expenses, one income. Must be two also related similar. Like if I pay rental, as well as I need to include the rate. Rate is the electricity and the water bill. So they put it together. You can see the bracket here. Balance BT for rent is how much, rent is how much they pay, and then rent is how much they pay. At the end of the day, income statement also you separate them into rent and rate. But when you transfer to income statement, you must separately show in your income statement under the expenses. So you cannot total them up. Only you do the account combined together in one T account. So sometimes business may use the ledger for two different but related expenses. So the same principle apply as those used for the account in one single expenses. So the only difference is they may show two opening and two closing balance. Okay, now we go to the accrual and prepayment in income. So as usual, I use back the summarize here. No matter it's income or expenses, when there is accrual situation, I need to add back when I prepare my ledger that time. So prepayment as well, I use back the previous summarize. No matter it's income or expenses, when there is a situation of prepayment happens, I need to minus out the prepaid amount. Okay, come to the explanation. Income accrual means another person receiving a benefit or the service from the business during the accounting period has not paid for the benefit or the service by end of the accounting period. So this is very important. That's why I highlight in the red colors. Usually they will ask in IGCSE short question, short theory question. To apply the matching principle, so your total incomes account must transfer from the nominal to the nominal ledger to the income statement at the end of the financial year. So therefore, the amount that you transfer to the income statement must add when there is an accrual to make it as total of 12 months incomes that you're supposed to receive, and then you transfer to the income statement. Due but yet to be received means that people owe you money. It is current asset in your SYP. And when there is an income's prepayment, there is a person who has paid for the benefit or service but had not been provided the business at the end of the financial year. So means that I'm receiving something that I haven't provided service to the people in future. I'm receiving the money for future service that I'm supposed to provide. Okay, so to apply matching principle same, I will transfer the income statement with the exactly 12 months figures of income amounts into my from the ledger to my income statement. Any amount that received during the year are relating to the future accounting period, I must deduct it out, and then later only I transfer to IS, other income section. So amount that received in advance, I must group it as a current liability because I received something that not supposed to receive this year is for next year, means that there is a I owe people monies. Okay, for income accrual with the accounting transfer and transaction, I'm showing here as an example. So during the year 2023, ABC Trader received a total of 1,100. I'm using the same example, but I change it as a rent receivable. So at the end of the day, they found that it's a 100 receivable is still on due. On due means they still owe. So in this situation, we are no longer cash book credit side because I received. So debit cash book 1,100, and then rent receivable account I must show at credit side because increase of payment in income is credit side. So bank I receive for 1100 as the money from the person who stay in my building. So and then at the end of the day, they say they still have amount owing, so I add back here. About amount owing means that I already stay there for 12 months, but I didn't pay you full 12 months. I must make it as 12 months amount, and before I transfer to the income statement. At the end of the day, I debit out from the rent receivable account and credit in to my income statement as a income. Okay, so you must supposed to show included the accrual amount. So the the double entry as shown as follow, you can refer. Now prepayment, so I will show means that if there is a future receive income, I need to minus out. So deduct, can you see the note number 2, deduct out from my prepaid income. And the money received, cash book increase 1,400. I don't really concerned about this 1,400 whether it's accrual or prepayment. I will just put that as the money that I receive, because cash book only see the actual money received. And come to the rent receivable account, credit side will be increase of the income, debit side adjustment for minus. So credit side I receive money 1,400, and but this 1,400 is included the prepayment of 200, therefore I need to minus out from my debit side. So therefore I will know how much that I should show. Number 3, then only I adjust the income statement. So 1,400 minus the 200 extra, and my income statement now is accurate. 1,200 as the money I receive for the rent receivable. So debit rent receivable account, credit the income statement account. The double entry as shown as follow, you can refer. For at last, we talk about the opening balance on income account. So a closing balance as usual from last year, you must it will become this year balance, opening balance BD. So balance CD will determine the balance BD side. So I always refer to the balance CD last year to find my balance BD side, which side I should enter. Okay, so for example, there is a rent receivable accrual for 150 on 31st January 2023. So I type up in the table, easy for you to see. And the rent receivable prepayment at the end of the day 100. So how much I pay during the year? I pay 2,500. So receive cash book, I received 2,500 for the rent receivable, but this one it could be included the prepayment or accrual as example. But I don't really consider about this because cash book uh, didn't see the accrual and prepayment, only see what actually pay and receive. And rent receivable account, I use my balance CD last year to find the site that I supposed to show for my balance BD. So example, as mentioned here in the question, rent receivable accrual last year. Accrual I must put under the plus side. So plus is credit for my income. So I put on top here, and then I put an arrow to find the balance BD. Where should I place this year? So last year amount owing will be this year debit side. Why it is so? Because the bank amount 2,500 here actually included the payment for last year 150. But last year one or future year cannot included to this year calculation. So automatic they will help to minus. Can you see the debit minus here? This 150 when they calculate the income statement amount. So at the end of the day, they have a prepayment also. So balance CD for this year to represent current year prepayments minus under the debit side. So the total 2,500 minus the last year 150 and minus next year prepayment. So this is the actual amount that I should show for 12 months for current year in my IS. So I transfer out debit and credit into my income statement as a income 2,250. So below is the double entry. You can have a look. Okay, thank you. Time, if you have any question, you can ask me. Thank you.